Now, that is your gross income. Your gross, not what you actually bring home with the paycheck after Uncle Sam got their piece and you paid your insurance and what have you that comes out of your check. But they're looking at your gross, whatever it is you make, and versus what you have on your credit report. On your credit report. And then sometimes, well, a lot of times on the application now, they'll ask for something that might not be on your credit report, such as if you owe the IRS, because that's no longer on your credit report, or if you have child support. So they're looking at those things and trying to figure out what your debt to income ratio is. So they're looking at those things to see, are you able to pay us back? So they're looking for stability then. They want to make sure you're going to be able to make those payments on time, every time, and they're going to get every dime back, plus the interest that they're charging you on that. So those are some of the things that banking institutions are looking for when it comes to you applying for credit and whatnot. But the first thing that I said was credit scores, because typically that's the first thing that they're looking at is your credit score. Banks have their own, any lending institution, whether it's a credit union or a finance company, they're looking for, they have their own policies, if you will. So, some places they're not going to lend to anybody that has a 600 credit score. Other places they love to lend to people that have a 600 credit score. Does it cost you more money in terms of interest? Absolutely, it costs you more money. But they're willing to lend to you if you have a 600 credit score. Some banks will say, we're not touching anybody that has a less than a 650. They won't do it. I don't care how much money you make. I don't care where you work. I don't care who you work for. You're not getting a loan here because 650 is just below our threshold. So those are the kinds of things that come out when it comes to that. And I want to take a pause for the calls right quick. So I do have a question of the day, and this is where I usually do it, and I'm going to do the question of the day right after this. But I want to tell you guys, earlier in March, probably in March, when the whole COVID-19 thing hit, I warned you guys that some institutions will be looking at credit card institutions will be looking to lower your credit limits. And they'll be looking to do that because they see what's on the horizon. They saw it, back then. Good business, right? They're smart. They're thinking forward. They're looking forward. And they were starting to lower limits on people's credit cards. And it didn't matter if your credit card was with a furniture store or a jewelry store, or you had a Visa, MasterCard, Discover, American Express, whoever you had, they were looking at maybe lowering your limits. Now, when they lower your limit, if you owe anything or if you don't owe anything, a lower limit, just like if you were to, say, cancel a card or whatever, then that impacts your credit utilization. If you no longer have access, that access you used to have to a credit card, as far as money is concerned, that is going to lower your that's going to make your credit utilization go up. So if you got a banking institution that has done that to you, you needed to make sure. You need to be on the lookout for that. They should have sent you a letter or email or something to tell you that that's going to happen. And the reason I bring this up is because I received a letter this week from one of my credit cards that said they were basically they said in the last year or two you have not utilized your your full credit limit or something of that nature. So we are going to lower your credit limit, and I told you guys don't allow them to do that if you have any say so in it at all, because of course it's going to make your utilization go up, which is going to make your credit score go down. So when I received this letter, and I was reading the letter, and they actually cut it in half. So they said they were going to cut it in half. I don't owe a dime on this particular card. Have I used it? Yes, I've used it sparingly, very sparingly. I've used this particular card, but I don't owe a dime on it. I think I paid the card off in October, November of 2019. I paid the card off, and I've used it maybe once since then, maybe one time since then. So they said they were going to cut it in half. And then they didn't say, give us a call and we'll stop it, or maybe you can negotiate something else. They didn't say that, but what they did say is, if we don't hear from you in like 30 days, basically, if we don't hear from you, and it gets lowered, then we're not going to be able to raise it for you without pulling another credit report on you. So they were warning me, if I wanted to make those changes, that they were going to have to pull another credit report on me. And so I literally picked up my mail. I think happened to be coming out my house that day, and my mail lady, who was such a sweet lady, happened to be coming by at the time. So I think I opened that letter before I even got back in my house and made the phone call to them. And when Irene answered the phone, like I tell you guys all the time, get the name of whoever you're talking to. And so Irene answered the phone, which was my mom's name. So when she answered the phone, I just knew it was going to be good. It wasn't going to be a problem because her name was Irene. And I told her, I got this letter in the mail that said you were going to lower my credit limit. And I just simply told her that's unacceptable. And she said, well, wait, let me take a look or whatever. And she did. And it wasn't a minute. And she said, okay, fine. We will not lower your credit limit on your card. And I said, thank you. I appreciate it. And I just made note of what time that I called. I already know that it's Irene. I did not get her badge number or whatever it is, and I tell you guys to do so. But I do have Irene, and I do know what time I called and I spoke to her. So that's just a little thing that you guys need to know, because I know, even though I haven't bothered to look at the what it would do to my utilization. And full disclosure, my credit utilization is at 5%. I don't know what it would have done to it. I mean, it's going to raise it, but does it put it over 10%? 10% is that other magical, I'm putting up air quotes, that other magical number. You want it to be at 30% or less, but it seems that, people are getting a bump in their credit scores too when you're at 30%, and then again at 10%. And so if it puts it over, 10%, my credit score is most likely going to go down, and I just can't have that. I'm not having that. I've worked too hard for it, right? And at the same time, I asked her while I was on the phone. I said, hey, so what's my credit score? And, she's giving me a FICO score, even though their website gives you, and the app gives you a Vantage score. She was giving me my FICO score, which was 839. So another thing I want to tell you guys, make sure you get your information from somebody that has been where you are, has done it, and has where you want to go. So yes, my credit score is 839, and I think they use Experian. No, they probably use Equifax, this particular company. So I just wanted to share that with you guys. If you've gotten those letters already, if it's past your 30 days, you might be out of luck. But if they come to you, you make sure you give them a call and say that you don't want this to happen for your credit, credit limits, because it's going to negatively impact your credit score. All right, so let me get to the question of the day then. Question of the day came from Richard from New York. He sent me an email. What if the card I am becoming an authorized user on has a short history? Should I bother? So my answer back to Sherrod, that's my nephew's name. My answer back to Richard was yes and no. So what else is that card doing for you? So I always tell you guys, if you're going to become an authorized user, you want to have a perfect payment history. Ideally, you want it to be open longer than your current length of history. Got to be 5 or 7 years old. At least 10 is great if it's 10. And then also you would prefer it to have a low credit utilization as well. That's going to help you out the most when it comes to getting an authorized user. But in this particular situation, the card had a short length of history. So what else is that card going to do for you? So if you have a short length of history already yourself, then it's not helping you in that particular pillar, right? So that pillar of length of history is 15% of what your score is. Let's say, for example, if it's 2 years old and your current history is 5 years old, already it's pulling down that particular pillar, right? So that's a negative for you when it comes to that. That's an absolute negative. But, if it has a perfect payment history, that's very helpful for you, right? That's very, very helpful for you. And that's 35% of your credit score, already greater than 15% that the length of history is, right? That's 35% of your credit score. And let's just say, for example's sake, it has a credit limit of $10,000. It's got a credit limit of $10,000, and it just has a little, quote unquote, little balance of $1,500 as a balance on there. That means the credit utilization on it is just 15%. So that's well below the 30% threshold that we're all trying to get to, at least, right? That's well below that. So that's very, very good for you. Now, if adding that to your personal credit utilization right now, and it takes you down under that 30% threshold, then it's absolutely well worth it to go ahead and add that card. Even though it's not optimal, it doesn't have all of the three things that you need and you want from it. Even though that's the case, that's very good, because what do you get? You get payment history, even though it's just a couple of years, but it's 35% of your score, plus your credit utilization goes down, and that's 30% of your score. So 65% of your score is impacted positively versus the minor hit you'll get for the length of history, which is only 15% of your credit score. So I say, Rashard, you should go for it. So Rashard, thank you very much for contacting me. You are officially a part of the 800 Credit Score Man show. And if you have questions, please contact me, 800@creditscoreman.com. Text me 312-600-5855 and catch me on social media. I'm on Instagram as 800 Credit Score Man. I am on Twitter as @creditscore_man. I do follow back on Twitter. And Facebook, you can catch me at 800 Credit Score Man as well. And always you can join Credit Score Comeback on Facebook, that Facebook group as well. All right, so thank you very much, Rashard. I appreciate you. So where are we at? We're talking about banking institutions and what are they looking for? What do they want? FICO or Vantage Score. What do they want? What are they looking forward to, right? What do they want from you? So they want to see how you handle your credit. They want to evaluate if you're impulsive. Do you do a lot of spending and then pay it down a lot? All of those kinds of things. Do you run up a lot of debt? Do you pay your bills on time? Of course, they want to see if you're going to pay your bills on time. So that's what FICO's looking at, and they want to see how often you're asking for money. So that's where the inquiries come in from. Like I've told you before, they think that 6 inquiries is too much. That doesn't mean, to me, that's not too many inquiries, but to them it is. And I think this is the worst pillar when it comes to credit. Is the worst pillar as far as I'm concerned. They need to eliminate it and maybe replace it with something else. But yes, so those are just some of the things that FICO is looking for when they're trying to evaluate your credit. And all of this is about your plan. You need to know what these entities are looking for so you know how to combat them and manipulate them into your advantage. And then lastly, the credit bureaus. They're actually relying on FICO to evaluate you and supply them that information. So the credit bureaus are saying, "Hey, we're looking for FICO or Vantage Score to tell us, what number they will put this particular person at. Where are they putting this person at?" So all three of these entities, the banking, lending institutions, the credit bureaus, as well as FICO and Vantage Score, are all kind of working in tandem. They take information from each other to help each other evaluate what's going on, all except for FICO. FICO is running the whole thing. Vantage Score is running their portion of the thing. 90% of lenders use FICO when they are trying to evaluate your credit worthiness and judge you on should they lend you money or not. Then the banks and the lending institutions take that particular number. They take that particular number after they get it from TransUnion, Equifax, and Experian, and they start to evaluate how much money they should give you, should they approve you, should they deny you, things of that nature. So all of these things are working in tandem, and it's good to know what each and every one of them are doing, so you know how to navigate these waters when it comes to your credit. So look, we're coming down to the tail end of the show. Let me give some shout outs right quick, and then I'm going to give you a couple of tips really quick. So, Felicia Randolph, she celebrated her birthday. So I want to say happy birthday to you, Felicia Randolph. Antoinette Mann celebrated her birthday. Ex-roomie had a nice Zoom party yesterday. So happy birthday to you, Antoinette. And then Kayla Bodie celebrating a birthday as well. So happy birthday to you, Kayla Bodie. All right, so let me just give you a couple of things that I think you ought to do. So, of course, one thing is you got to get that credit score. I'm going to say it every week because you can get it every week now.